Hello and welcome to Islamic Finance Weekly. I am Rahma Sayyid Muhammad. Compliment of the season to you, our viewers. So today we're at Marble Capital to discuss with Akim Uyewale, the Chief Executive Officer of Marble Capital Limited, and Busola Kuku, the Head Assets Management at Marble Capital. So we'll be discussing with them on prospects and trends in the capital market industry for the year 2025 and beyond. Thank you for having us, Mr. Akim. Thank you for having us.
Hi, Rahmat. Pleasure.
So we'll be having our conversation circled on capital market because, that's your niche. So that's why we're here. So research has shown, the younger demography over around 50%, that is their, financial inclusion. So we'll be talking about, how global economy in 2025, what are the optics for growth, and, how do you think the non-interest finance market will attract younger investors in this year and, beyond?
Okay, thanks again, Rahma and Web TV for this opportunity. Yeah, I agree with you that the younger folks, are a bigger pie in terms of the demographics that we have in Nigeria right now. And any business element that's looking for growth must actually have stuff that will address their needs. And I think the non-interest capital market is ready for that. In the last couple of years, we've seen I would say, the poster child of non-interest capital market being the Sukuk issuances by the federal government of Nigeria, to finance infrastructure and the like. We've seen the private sector, actually latch onto that, and we've seen issuances. We've also seen the regulators and the relative exchanges, FMDQ and all of that, also latching on and trying to bring in products. But for the youths, we are also seeing folks like Carrywise, which is more like a digital marketplace, for capital markets, interested in showcasing non-interest capital market opportunities, using their digital means. Marble Capital, as you know, we are a key player in the industry as well. We have an app, Marble Invest. We are collaborating with other digital institutions like Carrywise I mentioned. Right. We are working with FX, and we're using technology to address the needs and get to this youthful demographics that we think are going to be very important. We're going to enhance that, right. And I'm sure when the government comes back again to the capital market, they're also going to leverage on technology.
Right. Okay. Thank you so much for that. Thank you for that enlightenment. So let's talk about SDGs. Sustainable Development Goals. We could hardly talk about anything, finances or anything, without talking about SDGs. So how do you think non-interest finance is going to play a role in this? Some of these SDGs, which are financial inclusion, no poverty, zero hunger, quality education, gender equality. I already see a form of gender equality when I worked into this building. So kudos to you for that. So thank you, welcome. What role do you see Islamic finance, or non-interest finance playing in this SDGs?
Okay, thank you for that. I think a critical part of Islam, and a critical part of Islamic finance and to an extent non-interest capital market is what we call the Maqasid Sharia. Okay, the Maqasid Sharia just relates to the essence of being, of a Muslim. And in Islamic finance parlance, essence of being in the Islamic finance world. And if you look at the Maqasid Sharia, there are 5 in number, they align very, very closely with the 17 SDGs. Mm-hmm. So I say to people that anybody that's interested in investing in any ethical finance instrument, just invest in a non-interest finance instrument or Sharia compliance instrument. Mm-hmm. And what does that mean? It means all SDGs, which are by nature ethical, they comply with ESG standards, no poverty, gender equality, life beneath water, in all of that, education and all of that, marine life, they are all captured under the Maqasid, which is the essence of being, protection of life, protection of wealth, enhancement of lineage and faith and the like. So you can see a very, very, literally 100% alliance. So how does this affect or impact Islamic finance? In the last couple of years, we've seen the introduction of green bonds. We've seen the introduction of green sukuk. Mm. And what investors have tended to align or realize is that any sukuk issuance naturally meets 2, 3, 4, 5 SDGs. Take, for example, the sukuk issuance by the federal government of Nigeria as an example. They raised close to 1 trillion naira now, and people have seen how these infrastructures are being built. We cannot exhaust conversation on that, because by building a road using ethical finance means you are creating jobs, you are helping livelihoods for a lot of people. And what we've seen as well is that a lot of those infrastructure being built, they build it in a way that the Sharia advisors will insist that all ethical standards must be met before they even sign off, on the transaction itself. And by doing so, they are literally asking that 2, 3, 4 SDG goals must be met in actually achieving that. So the alignment is literally very, very high. And we see that going on. Green sukuk coming up, a lot of sustainable sukuk coming up as well, social sukuk coming up, and meeting the needs of people, and also allowing SDGs to be met.
Right. I would say, non-interest finance goals and SDGs, they're quite natural. Like the synergy is there. I mean, when you mention non-interest, ethical, and then mention SDGs, there's just a way they fit in so seamlessly. So thank you for that. So as a fund management, company, Marble Capital, as a fund management company, amongst other things that you do, what are your, expectations from the regulators, from the regulatory body in facilitating the growth of, ethical finance? Even though we would say non-interest finance is gaining traction, but what role do you see the regulatory body playing in, achieving wider, inclusion?
Thank you for that. The regulators, and this is not to bash them because they're doing a good job. I am close to them and I say my mind, when we've analyzed in the business and we think they should do a few things. Number one, we have in the capital markets in Nigeria what we call the master plan. There was a 10-year master plan that was crafted, by the SEC and a couple of us that the SEC brought together in the industry to assist in crafting 2015-2025. This is 2025. And the objective was to ensure that 25% of capital market transactions are non-interest capital market transactions. 10 years down the line, or 9 years gone, we're still in single digits. That shows that there is a huge room for growth. That was one of the reasons why organizations like Marble Capital came into being. If you really want to assist the Nigerian capital markets and the African capital markets to grow in the non-interest space, we need people to come in and bring in their intellect. The DG of the Director General of the SEC was in Pakistan recently, in December, and he spoke eloquently about the growth he has seen and he sees in non-interest capital markets, and it was encouraging others to come in. Now, it's one thing to say things, it's another to actually back it up with action. So I would just urge the regulators, to be a bit more responsive. Timing is of essence in markets, especially in the capital markets where investors need funding and they need done like yesterday. The second bit I will also speak to is the importance of being open to new ideas. To this extent, I will refer to, an SRO, FMDQ exchange, which some people would call a pseudo-regulator. They were quite innovative in introducing NICP rules and guidelines, and that was really good because it allowed for the issuances of commercial paper for the non-interest community. And we, Marble Capital, we actually led the charge and we introduced the first NICP in 2024. The point I'm making is we need regulators, SROs to have an open mind. The fact that something hadn't been done before doesn't mean you can't do it. You just need to listen and be willing to explore ideas, bring players together. The last point I'll make in that regard is the need for both the capital market players like NIFI and the organizations there and the regulators to collaborate in facilitating capacity building. We need capacity building. We need people to know more about non-interest capital market. We need people to be able to structure more transactions. We need them to be certified. There is an exposure draft of the SEC that has been out for almost 2 years now, regarding certification of Sharia advisors. And never finalized. We need those things to be finalized so that the market will know they are working in line with the regulations. When we have all of this and a lot more, I think the regulators will be playing their part in encouraging non-interest capital market to grow in leaps and bounds.
Right. Thank you so much for that. I'm glad I asked you that question because I mean you have first-hand connection and experience with the regulators, so you're able to let us know, further than we would actually think. So thank you for that. So okay, now to you, Busola. Let's talk about women in finance. I mean, let's talk about how you've been, part of the management team in Marble Capital. You've been the asset manager in this company, right? So let's talk about, how you see women being included more in finances and being included more in the management, team, and how you see, more trends and prospects for further inclusion for women in finance, especially in the non-interest finance market.
All right. Thank you, Rahma. Okay, so just as he has said around the SDG goals and all that, and I think also in Islam, it's important that there's gender inclusion, especially for women. Women shouldn't just be on the other side thinking that they can't put themselves out professionally. And it's, I think, also speaking to what Akim had said earlier, it's really around capacity building. So as long as we have, whether female or male, as long as we have the capacity in each of these individuals, it really doesn't matter what the gender is. As long as they understand what to do, they're properly trained, the sky is the limit for any woman in any field at all. And as for me, it really doesn't matter. No one sees the femininity. As long as you're able to deliver what it is you're delivering, and you're able to sit with the board, you're able to sit at any table and deliver exact value that the investors require, that the board require. The sky is the limit for any lady,
Right.
really, in the business.
Right. Okay, thank you so much, Priscilla. Let's not take much of your time.
It's fine, thank you.
So looking at the year, rounding up the conversation, looking at the year 2025 and beyond, what are those key drivers that will shape the non-interest finance market in Nigeria? Let's talk about that.
Okay, thank you very much. And I'm glad you also asked this question. I mean, I'm actually quite bullish about the growth of non-interest capital markets in Nigeria. Number one, we expect, we didn't see last year, so we are highly expectant that government will come back to the market this year and raise a grain sukuk, raise an FGN sukuk again, and expand that space. But more importantly, and what we think will be a lot more interesting is what the National Pension Commission is about to do. The National Pension Commission, 2 years ago, they introduced Fund 6, which is the non-interest fund for pension funds and all of that. We've seen a bit of drag, in the expansion and explosion of that segment. I mean, we were bullish about it, but it hasn't really panned out the way we thought it would. But what are they doing? Last year, they constituted what they call a pension advisory committee, PINAC, and we expect them to inaugurate that any moment from now. Now, why am I speaking about this? If and when PENCOM eventually allows a regulatory body and advisory committee of experts to be in existence to certify transactions that are meant to be available for pension funds, that will be a signal to the market that even the regulators have realized a need for non-interest capital market instruments. Right. The potential for growth there is enormous. And if they have a relatively active board as the PINAC, which I think they do, the members are quite good, you can expect a lot of transactions in the next few months, because the demand is there, is a latent demand that is being capped right now because of the time it takes to get approvals, for phrase to meet, for SEC to approve, for all of these things to do. But what PENCOM is about to do is short circuit that length of time. And the pent-up demand, is likely to be met by quality issuances in the near term, whether short-term instruments, whether long-term instruments, medium-term instruments, international collaborations with other potential investors in the country. And we're already seeing even organizations like the Bank of Industry, they are showing a lot of interest. They want Sharia advisors to work with them. DBN, Development Bank of Nigeria, they're asking for Sharia advisors to work with them. Major banks are coming up, the Lotus Bank, the Taj Bank, they are raising capital, using Islamic finance instruments. And we're seeing even the regular conventional banks, they are setting up more and more funds, that align with Sharia standards. So the market is there. People need standards. They need the regulators to ensure quacks don't come in. They need bodies like NIFIAN, which is the umbrella body for Non-Interest Finance Association of Nigeria, to maintain standards. Capacity is there. I'm really bullish about 2025. I think it's going to be a good one for Nigeria and even beyond.
Fingers crossed. Thank you so much for that. Thank you for your seamless enlightenment and input in this conversation. So, fingers crossed for 2025 for non-interest finance. So, thank you so much.
Thank you, Rahman.
That was an engaging conversation we've had with Akim Oyewale and Busola Kuku, the head asset management at Marvel Capital. We're able to see how there's synergy between SDGs and, non-interest finance market, and how, there's prospect and a wider horizon for growth in the non-interest finance market. And with that, I would say, don't forget to keep it updated as next week on the program. Follow us on all of our social media platforms displayed on the screen. Thank you for watching, and as always, I am Rahma Saeed Mohammed.